All right, so let's jump right in. We're going to talk about a company called Ultimate Products. Now, you might not know the name Ultimate Products itself, but I'll bet you know their brands. And in their latest financial update, they presented a really interesting puzzle. How can a company's sales actually be falling while its management sounds more confident than ever? Let's unpack it. So first off, who are these guys? Well, Ultimate Products owns a whole collection of household brands you'd probably recognize. We're talking about Salter, the kitchen scales company, Beldray, who makes all sorts of floor care and laundry stuff, and Progress Cookware. They call themselves the home of brands. And get this, almost 80% of households in the UK own at least one of their products. Okay, so here's the puzzle I mentioned. In their latest report, revenue was down 6%. Now, that's not typically something you brag about, right? And yet, the company came out and said they actually beat their own guidance. They sound optimistic, they sound totally focused, they sound like they're following a very, very deliberate plan. So how is that even possible? How can falling revenue be spun as a win? I mean, it seems like a total contradiction. But as we're about to see, it's all part of this very specific, and I think pretty fascinating strategy to get stronger by, well, getting a little bit smaller. To get to the bottom of this, we've got to look at the numbers first. And I'll warn you, on the surface, they tell a story that looks pretty challenging. Okay, so let's break down the big figures here. First, the tough news. Revenue is down 6%, and adjusted profit is down a whopping 29%. But look closer at the other numbers. Their debt has actually improved, which means their balance sheet is stronger. And here it is, our first major clue. In the middle of all those declines, their core branded sales are up 5%. That's the number to watch. The company isn't trying to hide from the fact that the market is tough. In fact, their CEO has a perfect name for the challenge that they, and frankly, a lot of other businesses are facing right now. He calls it the squeeze, and this graphic explains it perfectly. On one side, you've got costs like payroll just constantly rising because of inflation. On the other side, revenue is flat, or maybe even falling, because consumers are feeling the pinch too. And that critical point where those two lines cross, well, that's where a business flips from making money to losing it. The CEO, Andrew Gosage, used this fantastic analogy. He said, the good times are like being on an escalator that's going up. You can just stand still and you'll still make progress. But right now, the escalator is going down. You have to run and run hard just to stay in the same place, let alone actually move forward. So if the market isn't going to do you any favors, you have to help yourself. And that's exactly what Ultimate Products is doing, with a really clear three-part internal strategy to fight back against the squeeze. They call it their commercial triangle, and the idea is pretty simple. Instead of having a separate strategy for brands, another for products, and another for sales, they've built one single coordinated plan where every single part reinforces the others. Let's break down how each point of this triangle works. All right, the first point of the triangle is brands. The company has made a huge shift from what it used to call a trading business, which is more about, just sourcing things opportunistically, to being the home of brands. And you can see it right here in the packaging. The old versions are up top, and the new, much more professional, brand-focused designs are on the bottom. It's a total glow-up. The second point is products. And man, do they have some incredible history to work with. Get this, their brand Salter was founded way back in 1760. It is literally older than the United States of America. This isn't just some brand they made up yesterday. It's a piece of history, and they're leaning right into that sense of quality and trust. And you know what? Their product strategy is totally working. This Beldray floor cleaner won a really prestigious Which Best Buy award. And in the process, it beat out super premium, expensive brands like Dyson and Vax, while still being sold at a price for everyday people. Their mission is beautiful products for every home, and this thing is the perfect example of that. So the final piece of the triangle is sales. And here, they've moved away from just making these sort of seasonal pitches to retailers. The new approach is way more data-driven, helping stores understand exactly what products are going to sell and when. The goal is to become a true long-term partner, not just another supplier. Kind of like what you'd expect from a huge company like Procter & Gamble. So that's the plan to drive better sales. But a plan is useless if you don't have the resources to actually make it happen. And that brings us to the engine that's funding this entire transformation, their secret weapon, a radical, almost obsessive focus on productivity. What does that even mean in practice? Well, it starts with this number, 1,300. That's how many robotic process automation bots, or RPAs, are working away on their servers every single day, automating thousands of those repetitive, boring tasks. And altogether, those 1,300 bots save the company an incredible 100,000 hours of human work every single year. To put that into perspective, that's basically like having 50 extra full-time employees working for you 24/7 for free. And the result of all that automation? A 20% reduction in their headcount since 2023. But here's the crucial point. This wasn't achieved by just firing people and cutting into the muscle of the company. It was driven by becoming hyper-efficient first. And here is the ultimate payoff. This intense focus on productivity has allowed them to keep their operating expenses flat for 4 years straight. Just think about that for a second. In a period of massive inflation where everyone's costs are going through the roof, theirs haven't budged. This financial discipline is what's freeing up the cash to invest in their brands and products while their competitors are getting squeezed. Okay, so now we have the full picture, a brand-focused strategy that's funded by this powerful productivity engine. Now we can finally see how this whole plan connects back to those confusing financials and what the risks and rewards look like on the road ahead. And this chart solves our puzzle. That drop in revenue wasn't an accident. It was a choice. You can see it right there on the bar on the left. They deliberately cut £6.5 million in revenue by shutting down their low-margin clearance division. Then, with the bar on the right, they replaced a huge chunk of it by growing their high-potential European branded sales by £4.4 million. It's really simple when you see it. They traded bad revenue for good revenue. Now, a big trade-off like that has consequences, both good and bad. The good? Absolutely explosive growth in their European branded sales, up 91%. The challenging part? That new mix of sales comes with a lower gross margin for now, and their core UK market did decline a bit, which is exactly why they refreshed their sales team to fix it. Looking ahead, they are definitely not complacent. The CEO is keeping a close eye on geopolitical risks, especially how oil prices might affect the cost of things like plastic and aluminum. Their biggest worry is consumer demand. You know, what happens if shoppers get spooked and just batten down the hatches? But they also see a silver lining. A really tough market puts a ton of pressure on weaker competitors, which can create huge opportunities for a strong, efficient company like them to gain market share. And all of that brings us to our final thought here. Ultimate Products made a very deliberate, very calculated choice. They chose to shrink their top line, taking a short-term hit, to focus all their energy on building a more profitable, brand-led, and efficient business for the long haul. So I'll leave you with this question. In a downturn, what's the braver move? Chasing any sale you can get, no matter the cost, or having the discipline to get a little smaller so you can get a lot stronger?